Welcome to Turning Hard Times into Good Times with your host, Jay Taylor. This hour will help investors fix issues and achieve personal gain. Now, here's your host, Jay Taylor.
Welcome back to a special edition of Turning Hard Times into Good Times. I'm your host, Jay Taylor, and with me for a second time and for this special edition is Gianni Kovacevic. Gianni is a Canadian-Croatian investor in natural resources and an established author. He has been a speaker in industry-related conferences around the world on the themes of natural resources, demographics, and green energy. Having spent the past 15 years investing in natural resources, he documents his interest into a unique business model that caters to both businesses and investors. Over the past decade, he has provided valuable assistance in negotiated financings well in excess of $250 million from a large pool of global investors. Gianni's new book, titled My Electrician Drives a Porsche, was released in the summer of 2014 and complements over a decade of blogging about his interests and adventures, and copper specifically. Sharing his time between Vancouver and various European cities, he is fluent in English, German, Italian, and Croatian. And I might just add before we say hello to Gianni that you should follow his work on his blog. You can keep up to date with his thinking at copperbank.com. That's copperbank.com. Welcome, Gianni, and thanks for joining me again.
Well, thanks, Jay. It's actually copperbankcorp.com.
Okay, very good. Thanks for that correction, copperbankcorp.com. Because we do want people to follow what you're doing and your thinking there, because it is, I think, for me at least, for an older guy, it's cutting edge. So I want to thank you very much for educating me and our listeners on this topic of green energy and how copper fits into that story. You have been, as I recall at least, you've taken a bullish view, a long-term bullish view on copper, but the current price of copper is around $2.45 as we're speaking now. Copper is a market that is bought and sold every day. It's a very liquid market. The market is telling us that the price is going down, though. So, why? Why do you think the price of copper has been pretty weak lately? Why do you think that's so?
Yeah, well, it is a market, and it's important to understand that. And we've had a overwhelmingly bearish sentiment on all commodities, not the least of which is copper. And when you have this, sort of a global bearish bet on it, the Illuminati, the conoscenti, call them what you will, the price is going to go down. And certainly these things have traditionally followed the leaders of the pack, that being oil. Oil has been crushed. You've also had a very strong U.S. dollar, so anything priced in U.S. dollars has come off 25% or more. You've had global uncertainty. We've seen this ballet that's been going on with Greece now really it's been going on for years, but it's come to a climax in the past sort of 3, 4, 5 months. The Chinese stock market has collapsed. You people talk about growth in China, or real growth in China. It's growing at 7%. So there we are, and the price is $2.45. It's a traded market, and there are, because it's a very tight market, and I like to say it's not hypothecated like gold, silver, platinum, palladium, and other commodities. So it's more of a true market. And as the saying goes, when they raid the house of ill repute, they arrest everyone, including the piano player. So that's where we are now. And I also like to think that because this market, the copper market, is for the most part used, you cannot even get a futures contract too far out in the future. And it's very, very few tons. Just to recap for the audience, the global supply and demand of copper is around 23 million tons. And last year's number was 22.4 million tons supplied, and demand was 22.9 million tons. So there is no supply glut. The prognosticators who would keep suggesting there is a supply glut coming have been wrong 8 years in a row. And then the companies who give guidance at the beginning of the year, when we get near the end of the year, guidance is off. It's been off, 6, 7, 8% every year. And so far this year, we're off by about 7%. Supply disruption, we can call that. So the market is tight. And And the final component here, which is very important, because remember, this market is not hypothecated. People use copper. The fabricators, the manufacturers. I talk about Pirelli, Mitsubishi, and along the line. In a falling market, if you are a user of any product, you go hand to mouth. Why would you oversupply yourself in a falling market?
Sure.
In a rising market, these people get greedy. They want long-term protection. So because, even I would say millions of people around the world are the end users of copper, in a falling market, there's no need to have long-term supplies. But the market is still tight. And so for the most part, the big copper users, the strategic users, are going more on a hand-to-mouth sort of scenario right now in this falling market than they would otherwise, or more than they've been in the past years. This will change. And in a nutshell, those things combined is why copper has a very weak price right now.
Well, that certainly makes a lot of sense. And certainly if the market starts to perceive that there's a switch, a turn in the other direction, you would think people would start loading up and inventorying copper more so in anticipation of rising prices. But as long as prices are falling, as you say, why would people want to go in and buy it now? They'll get it cheaper tomorrow, perhaps. So that psychology changes. Obviously, things could change very rapidly. I get that. Well, fundamentally, what do you see the role of copper, say, longer term in the future? How do you see, where does copper fit in? We know what copper is used for these days. It's been used for wiring houses and, in electricity, essentially, and wiring the infrastructure, housing, and electrical needs. So what about the future? Are there changes coming for copper?
Yeah, that's the real question. What is the future role of copper? So we know the market's tight. We know that copper has grown demand for copper for over 100 years by, around 3%. At different times it's been more than that. But how is it changing? Now, it all comes down to energy. Copper is energy. And as I like to say, oil is energy. Energy without fossil fuels is electricity, and electricity demands copper. And if we look at how energy is going to change, now in the long run, I think everyone can sympathize with the fact that green energy will be more and more relevant. But the future is now. And if you talk to someone in the oil business, like let's talk about the Saudis. Today, on a global scale, we use as a global society around 93 million barrels of oil per day. And that's also grown for around 120 years. But if you ask someone from Saudi Arabia, what will the global demand for oil be in 2025 or 2030? We're getting to the point now where we're going to have decline. Now, it's very important to the global society. More people are going to consume more things. There will be more cars. But in my opinion, and the opinion of other people, that being the Saudis, one of the reasons they've flooded the market with oil is to kill these other producers. And if you have a cheaper oil price, it also, let's say, delays some of the conservation and some of the substitution that is inevitable. The future of energy, the way we create it, the way we transfer it, and the way we utilize it is going to be more and more so done without fossil fuels, and that means electricity. And the single biggest beneficiary of that is going to be copper. Copper is used 3 to 5 times more for every megawatt or gigawatt in utilization or creation. And that is something that overwhelmingly is going to drive the market. And I like, if I was Warren Buffett and if I was a value investor, one of his great analogies is, does your business have a moat around it? And is this moat protected with crocodiles and sharks? and is it getting bigger or is it getting smaller? Well, let me tell you, in the copper business, you have a humongous moat, and it's crawling with sharks and crocodiles because it's very hard to get to copper production. And this moat is getting bigger because no one's finding major new deposits. No one's investing in major new deposits. So I think fundamentally, in the future, we will in fact use more copper. And it's not just a China thing. It's this, the amplitude of European and American copper consumption is going to increase because you cannot export your house or your car or your garbage truck or all these things that are going to be more and more so electrified.
All right. So what are some of the technology? I'm thinking right away, electric cars, for example, or what do you see some of the end uses or some of the technology changes that are coming our way that might take advantage and use more copper?
Yeah, well, there's a lot of denial with green energy, and I will tell people that don't believe in solar or wind or electric cars. I just say, look at the numbers. The facts speak for themselves. The world's largest energy country is China. China, and people should write this down. You got to take people to task when they throw numbers around. But China
Hmm.
right now uses 1,000. They have about 1,360, 70 gigawatts of capacity, and that is about 850 of that is coal. So that's what's driven China. But in the next 5 years, they will build, their plan is about 175 gigawatts of solar and wind. That's more than their coal and natural gas capacity combined. And of course, this takes 5 times more copper. So it's real. The future is now. And so people don't believe that that's the way forward, and it's certainly there. And Bloomberg's latest energy report they just put out, written with people from 90 different, it's 90 different writers from 11 different countries. Over $12 trillion is going to be put into energy in the next 25 years. And by the time we get to 2040, two-thirds of that spend is going to be in renewable energy. So, it's coming.
Mm. So there's definitely going to be some opportunities, but you're saying not in the future now. Well, you've certainly been positioning yourself along these lines. You're putting your money where your mouth is for sure. How are you positioning yourself to profit from this move, this big boom in copper? I think you would not overstating it if I call it a boom in your view. So how are you positioning yourself?
Yeah, that's. I'll answer this in two parts. So first of all, what the price of copper today? It's $2.45. Nothing works as a new mine. You cannot build a mine at this price for the most part. So BHP Billiton, the world's largest integrated miner, in other miners will support this as well. They figure that for 70% of the projects out there, you need about $3.50 copper, and almost 100% of the projects need copper, significantly higher than $2.50.
Hmm.
So that's an insurance policy I will suggest to people that if this is one of the few times where there's nothing really being built right now.
Hmm.
And people seem to forget, unlike the other commodities, where the bulks, iron ore and coal, have had, you could say, an idiotic oversupply of capital. The same has not been done for copper. And there are only 6 or 7 or 8 CEOs that control, better than 50% of the world's copper. So they make the decision. They've already told us. I talk of Codelco, I talk of Freeport, I talk of Glencore, I talk of Rio Tinto, I talk of
Hmm.
Antofagasta. They're not building it. They're telling us. Mr. Oscar Landereche, the chairman of Codelco, tells you that they need to invest between 25 and $30 billion between now and 2030. They cease to be a copper producer, the world's largest copper producer, in 2030 if they don't make this investment. But we need $3.50 copper.
Mm.
So I believe very firmly that it's already a tight market, but in the next, call it 1 to 4 years, the price of copper has to go, well above 350. And it doesn't just go to 350. This stuff has to overshoot because no one gives you credit for 350 copper when it's trading at 350. So if you believe in this, you want maximum leverage to the price of copper. Now we go to the junior shares, the junior miners. And so I've, of course, have financed junior mining companies for coming on 15 years now, but I don't have the propensity or the patience to give these other management teams the money anymore. So what we're doing is we've created a company for ourselves. It's called Copper Bank, and it's self-explanatory. It's a holding company of copper projects. We now buy the entire project. We warehouse it. These projects are well advanced. We've got a project in Nevada, we've got 2 projects in Alaska, and I let people go on their own to the website and take a look at what we have. But effectively, it would take around 50 million Canadian dollars to duplicate the work that's already been done in these projects. So that's what we're buying. We're buying the research. We're going to buy low now, and we're going to divest. The plan is to divest higher when the market rebounds, and it inevitably has to go, I think, at least above $3.50 a pound. And so these projects are out of the money at 250, but there's a significant amount of optionality and torque on a per share value in Copper Bank, which is it's listed in America, Frankfurt, and in Canada.
Well, it certainly does make a lot of sense, Gianni, if you take that view that the copper has to rise by that level, and certainly I've seen it work very well in the gold sector. There was a company called Seabridge Gold that I invested in years and years ago that was doing exactly what you're doing, but in the gold sector. They were buying out of the money projects, essentially out of the money calls, and when gold rose in price, that was one of the biggest success stories that I've had in my newsletter over the years. I think we purchased it at $2.50 or so, and it went to over $30. So I certainly see what you're saying, and it makes an awful lot of sense. I think this is a fascinating theme that you're on here, Gianni, and I think it really pays. People should really be paying attention to this. Certainly, it's a vision that you have, and I wish you all the best in this, and would really look forward to keeping up with you as you go forward. Anything else you'd like to add before we conclude our discussion today?
Yeah, just a final touch. So people can, of course, read my book, which is now it's launching in the United States on February 9th, 2016, but it is currently available on Amazon in its current form. But I'll finish with this. So speaking from an investment perspective, and of course, for open disclosure, I'm one of the largest shareholders of Copper Bank, but just the value proposition. Mm-hmm. The market cap is 5 million Canadian dollars. We financed it at a 13 million valuation in November. We continue to buy the stock. If people follow the insider filing, you'll see that insiders supported. We've been buying it almost on a weekly basis for 8 months now. And from the market capitalization, effectively, we're trading at 1/5 of 1 penny per established pound in the ground. Our peer group is 1 cent a pound. So there's a 5 lift just to get to the average of our peer group. More importantly, when the buyouts were taking place between 2010 and 2013, the average was 10 cents per reserve pound. Oh. So you see the arbitrage or the torque. Now, will we get a 30 or 40 lift? Who knows? Will we get a 5 lift just to get to the peer group in this beaten down market? I think it's very possible. And I know my friends at Lumina Copper, when they built a strategy much like this, much like Seabridge, the initial investors in Lumina made 80 times their original investment. So that's the kind of torque or optionality or leverage offered to investors. And that's why we created this company. That's why we're the largest shareholders. And that's why we continue to accumulate shares in Copper Bank, simply because it's the downside, you could argue, is 1 or 2 pennies. The upside is the upside.
Well, there you have it, folks. Gianni's putting his money where his mouth is, and certainly the really successful investors over the years, the Warren Buffetts of this world, others that I know like Rick Rule and various people in the resource sector, go out and buy things when nobody else wants them. They buy value when nobody else wants them. So I think you're onto something here, Gianni, and I really look forward to keeping up with you as you go forward with your endeavor. It's fascinating stuff, and I think people are going to make a lot of money with you if they're patient. Thanks very much for being with us, and we'll look forward to talking to you again sometime in the near future.
Thanks so much, Jay.